Hi, my name is Blake Rodrigue, and this is my investment analysis project. Objectives in this project was to analyze 10 companies over 2 different industries, 5 companies from each. We were to conduct a ratio analysis from using information from the Bloomberg lab and to choose the best investments to invest in. The industries that I chose to analyze were the transportation industry and the semiconductors industry. The 10 companies were CSX Transportation, Union Pacific, Conway Freight, Norfolk Southern, and YRC Freight. And for semiconductors, Broadcom, Analog Devices, Intel, Qualcomm, and NXP. So in my presentation, I'm really only going to focus on 4 companies. Why is that? If you look here at the economic value added, you can see that CSX, UNP, and Intel and Qualcomm are clearly higher than everyone else. This means that their value is greater and they would be better investments. These are the financial ratios that have been used: liquidity, profitability, market value ratios, leverage, asset management, and Bloomberg information. I'll talk more about these as the presentation goes on. So the liquidity ratios are the current ratio and the cash ratio. Current ratio consists of current assets divided by current liabilities. The main thing that the current ratio tells you is, can you cover your short-term liabilities with your short-term assets? The higher the ratio is, the more capable you are to cover your liabilities. The cash ratio is more conservative than the current ratio because it leaves out inventory and accounts receivable. This allows for us to see how much cash do we have to cover our current liabilities. Now I'm just going to talk a little bit about each ratio for each company. You can see this is CSX. Their current ratio is just under 1.5 and their cash ratio is just over 0.5. This means that they have a little more than one asset for every liability for current ratio, and they can cover their liabilities with their cash only for a half of each one, which is not very good. Union Pacific is very close to CSX. Since they are in the same industry, that's common. Their current ratio is right under 1.5, and their cash ratio is also right at 0.5. Next, I'm going to talk about the semiconductors industry. Intel's current ratio has fluctuated a little bit over the past 5 years. You can see they were holding more cash into their company from their current ratio and their cash ratio, but over time they've been better about managing their assets, and they've done a better job of keeping their current ratio low. If the current ratio is too high and the cash ratio is too high, that means you're using your cash inefficiently to fund your company. Same thing for Qualcomm, except they're the opposite. They were doing a great job managing their current ratio and their cash ratio, but recently their current ratio and cash ratio have increased. This means that they're holding too much money, and they could be funding projects, putting money back into the company, but instead they're just keeping cash on hand, which is not very good. Next, I'm going to talk about the leverage ratios. The main financial leverage ratio is equity multiplier. This is your total assets over your total liabilities. This is also a measure of risk for a company. Leverage ratios can tell us the mixture of debt and equity and how the capital structure is arranged. The equity multiplier gives us insight on the risk of a company. If a company has a very high equity multiplier, they're going to be a more risky company. Another measure of leverage is your times interest earned ratio. It takes your earnings before interest and taxes, divides by your total interest. Basically, this says, can my company meet its debt obligations, and how well can it do that? I'm just going to talk about each company and their leverage and interest expense ratios. You can see CSX over the years is right around 3 on their leverage, which means they're a fairly risky asset compared to the market, which is a 1 on the equity multiplier. UNP is a less risky company, although they are doing better. CSX is able to cover their operating income fairly the same, around 6, and UNP kind of steadily increases, which means they're generating more income each year. Intel is not a very risky company to invest in, and Qualcomm is the same because their industry is just less risky. You can see their financial leverage is right around 1.5 over the past 5 years. And these companies are built to have a lot of income because they just have a high volume of sales. So you can see their income is very high to cover their interest expenses. The next ratios I'm going to talk about are profitability ratios. The 3 main profitability ratios are profit margin, return on assets, and return on equity. Your profit margin consists of your net income over your sales. This can tell you how if your costs are under control, because it tells you how much income you are generating only off of your sales. So if your expenses are higher, your profit margin will be lower. Your return on assets tells you how much income comes from your assets. How well are your assets doing to make you income? And the third ratio, return on equity, is your net income over your total equity. This can be considered the most important ratio for many investors since it directly relates to shareholder wealth. Profitability measures for CSX and UNP. Profit margin is right around 12 to 15 over the past 5 years, and return on assets is right around 5 or 6 for CSX. UNP has a much higher profit margin, which means they're doing a much better job of generating their income from only their sales, and their ROA is also higher. It's right around 7, 8, and the current ROA is 9. Intel's profit margin is started very low at around 12, but over the past 3 or 4 years, they've bumped it up to around 20, as high as 26 in 2010. They're doing a better job of generating income solely off of sales. Also, their ROE has been increasing the past 3 years, but then there was a little drop off in 2012 and in 2013. And Qualcomm has a much higher profit margin than Intel. They're generating a lot more income based solely on their sales, but their ROA is it's much more consistent, and it stays right around 15 each time. Now I'm going to do a ROE comparison for the top 4 companies out of my 2 industries that I chose. As you can see, CSX is lower for the transportation industry. UNP has the highest ROE overall. It's right under 25, but Qualcomm isn't far behind them. They're around 21 or 22. Some other ratios we use in our analysis are market ratios. You have your price to earnings ratio and your price to book ratio. Your total asset turnover can tell you how well are you using your assets to generate your sales. And your EVA, your weighted average cost of capital EVA, is your net profit after taking into account your cost of capital. And your enterprise value is a valuation method based on equity plus debt minus cash. As you can see here, the top 4 companies that I chose, Intel has the highest EVA. This is just your net operating profit after taxes minus your capital charge. So how well is my company doing, how much are they profiting from projects they have invested in? Equity multiplier comparison. CSX has the highest equity multiplier at close to 3, which means they're the most risky company. You do not want to invest in a risky company because you don't know where they're going to be in 5 or 10 years from now. UNP has a 2.5 equity multiplier, so it's a little lower, but Intel has 1.5, which is closest to the market. This risk and return relationship can tell us where we should put our money. So 2 is UNP. They have the least amount of equity multiplier, but they have the highest ROE, which means they would be the most attractive investment. So So overall, the transportation industry is not quite as good of an investment as the conductor industry as a whole, but UMP is a clear leader out of the 10 companies that I have chosen to analyze. And CSX would be the next best because they're also very close to UMP, just they're a little more risky. And if you chose to invest in the semiconductor industry, Intel would be better than Qualcomm, but Qualcomm has a higher ROE, but they're also more risky. And so overall, UNP is the best company to invest in. They give you the most bang for your buck. They're the least risky company, and they have the highest ROE. Thank you for your time, and this concludes my presentation.